Just looking at the headlines there, they look in line. I think if you looked at the first quarter, they had a slight expansion in their net interest margin, very minor, 4 basis points. Given the size of HSBC, it's difficult to change numbers dramatically. Very strong revenue growth in absolute terms, given the size of the business, but only 4%, in percentage terms. So, where we're focused on in the financials is probably banks that have a better growth platform. I think HSBC is more of a capital management story. They're talking about share buybacks. They pay a very healthy dividend, but they're still in transition, exiting from some of the businesses, or at least downscaling some of the operations in the US. They've obviously also got UK and European operations to deal with, and the repercussions of Brexit. So Asia's the majority of their business, and that's where they want to focus their growth on. And these numbers look, pretty good and pretty in line with that roadmap.
The challenge for HSBC and CEO John Flint is keeping costs in check while growing the global business. Do you think that he's on track to meet those challenges?
Yeah, well, again, I saw the first quarter numbers. I haven't seen the details today, but certainly they were on track in terms of reducing their operating costs. I think like most financials, we're increasingly seeing investment in technology to be more efficient. So again, from the headlines that I see with operating profit up, it looks like again they're meeting their expectations there.
ROE, and again, one of Flint's main concerns will be improving HSBC's return on equity, came in at 7.5% in Q1. We haven't broken out the numbers here yet. Lower than the target of 10%, which is what you are seeing in the Western peer group.
Yeah, well, I think this is more of a structural issue. I think if we look at banks in developed markets, the days of earning 20% type return on equity are well behind. Banks are increasingly looked as utility-like businesses, and I think during the financial crisis, particularly back in 2008, what was seen as over-earning. So I think getting back to kind of a double-digit level will be the aspiration of banks, and we're seeing that with the Singapore banks with aspirations for 12 or maybe 13% return on equity. So it's possible in banks that are very focused in what they're doing. The Australian banks, likes of Commonwealth Bank, still earns over 15%. So it is possible, but I think it's more challenged when you're as global as HSBC are and you maybe don't have the same deposit advantage in some of these markets.
And the flip side to the NIM environment, which is improving, and it's a tailwind for the banks in this region, is exposure to dollar liabilities and the bad loans that go with it in a higher rates environment. How much of a problem do you think that's for? Is for the sector?
Given at where we are in the economic cycle, I'm less bothered about that. I mean, one of the positives I took from the Singapore bank results last week, for example, was that we had healthy loan growth. I mean, I was actually quite surprised. Some of the banks were reporting double-digit loan growth. And to me, one of the challenges for the financial sector over the last 3 to 5 years has been that these new economy businesses, the internet businesses, they haven't really required the same level of capital and the same level of loan growth or loan demand that we've seen previously. So, that bodes well to me. So I think if we see businesses, increasing their loan growth, that's good for banks and it's good for, the economies in Asia.
And hopefully, this is HSBC specific, there are no further charges for past misconduct as there were in Q1. I think they had to incur around $900 million for that one. And now we are hearing, as of the 30th of June 2018, HSBC has recognised a provision for a tax-related investigation. This is going to continue to be a problem for the banking sector, isn't it? These provisions for liabilities related to legal matters.
Yeah, and again, I think this is a sector-specific issue. It's not a company-specific issue. There's increasing regulatory burden and regulatory eye and focus on this sector. And I think, unfortunately, that's something we're going to see more of.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.